Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. Qantas is one of, if not the most, recognisable brands in the country. And in the last couple of years, it's gone through more than its share of turbulence. But are there clear skies ahead now for the national carrier and its investors? As always, this is general information only, and you should seek independent advice before making investment decisions. Jakob Cakarnis is the Director of Equity Research at Jarden Australia. Jakob, welcome back to Fear and Greed.
Hi, Sean. Thanks for having me.
Far too many puns when you're covering an airline like Qantas, I suspect, but it has had an incredible run of challenges, from the ACCC action over selling cancelled flights, that was a couple of years or 18 months ago, to the illegal sacking of workers during the pandemic. Then its share price ran hard late last year. What's it up to?
Yeah, we're at this juncture now, Sean, where it's very much a delivery issue for Qantas. In the peak summer period, you would have seen a lot of the press lately talking up demand. It seems as though people are substituting out other luxuries in life to make sure that they keep on travelling. Airfares seem to have tempered a little, and where I talk about the tempering of airfares more is international. We would have seen since we last spoke that we did have that confirmation that Virgin and Qatar are getting together. At the moment, that union's via a code share, very similar to what Qantas has with Emirates, but it seems as though that Middle Eastern route into Europe is going to be the hotbed of competition for 2025. Domestically, things are going well. I think most investors that I speak to are happy about the market structure. We're still a little bit unclear about who leads Virgin into an IPO process, if that were to happen. So as far as that stands at the moment, we've got a rational domestic market and an international market, which is on a fine, delicate balance at the moment.
How much of a difference will Virgin Qatar tie-up make to Qantas?
That's a hard question to answer at the moment, Sean. I think immediately what comes to mind is additional capacity, more options for Australian outbound travellers, definitely by way of incremental seats and capacity. But I think the thing most important to remember for those Velocity members is now we've got a redemption path for all those Velocity points that have been accruing. And I think that will be the challenge for Qantas in 2025 is how does it supplement or complement its own frequent flyer offering when it's having more competition from Virgin Velocity, particularly in international redemption opportunities.
What about Project Sunrise? Do we ever get the Sydney-New York or the Sydney-London flight?
It's coming. I think its importance has increased since we last spoke. I think we were kind of saying that it's largely conceptual. I think now with potentially more hub-based competition, and as analysts talk about hub-based competition, that's Singapore, that's Hong Kong, that's Qatar, that's via Dubai, where you're stopping over on the way to your final destination. Obviously, Project Sunrise will overshoot all of those, so you'll travel point to point. There will be demand for that. It seems as though luxury cabin demand still strong, despite the eye-watering airfares. I know last time we spoke that they tempered somewhat down to 8 to 12,000, but there's still a large chunk of money to sit in a piece of metal for 14 hours plus to get to where you want to go. So, yeah, we're looking at that as being, I guess, the cabin or the market that underwrites Project Sunrise. But there seems as though there's still enough demand there for point-to-point travel.
Okay, oil prices and fuel prices as the big cost for Qantas. What's the outlook there?
That one's, again, really challenging. What the forward curve's showing us, so there are derivatives in financial markets that we can look at to guess the future. And instead of getting my crystal ball out, that's what we look at. We look at the oil futures. It's a pricing that traders try and demonstrate, 12, 24 months, even further out as 3 years' time, where they think the oil price will be. And what that's showing at the moment is a phenomena in finance that we call backwardation. So that's when the current price is higher than what the traders are betting at in the future. And that's what makes it challenging at this point in time. Currently, there's a lot happening geopolitically. We've got issues in Ukraine. We've got the Middle East, which keeps on flaring up in different parts. So it makes guessing the oil price really challenging. And I guess what's important then is how Qantas and Virgin manage that and how that gets passed through to customers. And we're still seeing some of the benefits from lower prices year on year wash through to those lower airfares that I mentioned earlier. So far, so good, I guess, is the scorecard, Sean. But yeah, something to watch as we head into 2025.
Okay, the 20-second elevator pitch, the good and bad of Qantas if I'm an investor.
The good now, really what's left to play is execution. So you need to believe that they can deliver earnings in line with market estimates. We're still slightly below the COVID peaks that Qantas reported, but in a really expensive share market now, paying 8 to 9 times price earnings for this company does seem reasonable in a market that seems increasingly expensive by all accounts. The bad really is incrementally, maybe we see some more competition at the margin. Like I said, more opportunity definitely for frequent flyers to use their points to access flights. And I think maybe that is going to eventuate maybe in some better service outcomes like we've been calling in the last few sessions that we've had in these casts for customers. So things like improved gate service, improved on-time performance, and maybe an upgrade to lounge and in-flight dining.
Jacob, thank you for your time.
Thanks, Sean.
That was Jakob Cakarnis, Director of Equity Research at Jarden Australia. Remember to get your own independent advice before making decisions. This is the Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail, FireAnt and Tactic.io, managing real-time risk. Get $1,000 off at vanta.com/fear and greed. I'm Sean Aylmer. Enjoy your day.